Has the inflation peaked in the United States?
Yes. I think, again, I hate to make any forward-looking statements and any bold predictions, but we've just started seeing with the last consumer price index number beginning of a downtrend. But what has given us this very sharp inflation in the US is really a consequence of the sharp lockdown, the very substantial government spending measures that were put in place after the pandemic hit, and a very supportive monetary policy on the part of the Federal Reserve. All three of those things have led to very strong consumer demand. We've had disruptions in our supply chains. And then on top of it all, we were hit by this war in Ukraine and a spike in commodity prices, mainly energy, but also food and other minerals and metals. I think those shocks are behind us, and a rising set of interest rates is going to cool US consumer demand. The bigger question is where it stops falling, whether we get back to below 2%, which we had before the pandemic, but that's a question really for next year.
In terms to tame the inflation, do you think how high will the rate go?
Well, the markets are saying right now the expectation is rates will top out around 3%, as I said, early next year. That's the current market expectations. And I think that's because there is an expectation that this very hot consumer demand that I described within the US will start to cool. Anybody who has to refill their car with fuel or comes back with a grocery bill that is substantially higher than what they faced last year is going to start slowing their spending plans. The housing market, we have seen borrowing rates rise for mortgages in the US. So that I think will start to cool in it. That will do a lot of the Fed's work for it, in the sense that markets will cool consumer demand and allow the Fed to slow the pace of increases towards the end of this year.
Another very hot topic in the market now is a soft landing possible in the United States? I mean, control the inflation without killing the economy.
I think that is the biggest question that everybody faces. Again, our view is that there is such strength right now in the US consumer. Cash balances in banks are still very high. And then I think importantly, our companies have both very strong earnings as well as very strong balance sheets. Our credit team looks at a lot of companies, both the largest ones and the smaller ones, and they have been able to access credit markets. They're not facing any big debt challenges or refinancing challenges as rates rise. I don't want to minimize that, but more broadly speaking, I think it's hard right now, if you look out over the next year, to see a risk of a US recession.
So you mean there is probably a recession, but next year?
Well, I don't want to say it that way. I'm not sure there will even be a recession next year. It's possible. And as I said, the odds may grow as we get more data going into next year. After that time horizon, we'll have to look at more data and see where things are headed. But again, the Fed is tightening, the consumer sentiment is slowing, and so there will be a natural deceleration in growth. But that doesn't necessarily mean we have 2 quarters of negative growth, which is the official economist's term of a recession.
Can I interpret what you said as that as the Fed is tightening, the economy is slowing, but not stopping yet?
Exactly. I think that's right.